December 2025. Arnott's, the 160-year-old Australian biscuit maker, the company that gave us the Tim Tam, the SAO, the iced Vovo, the milk arrowroot, refinances 1.75 billion Australian dollars of debt. 45 million of that comes from Australian taxpayers through the National Reconstruction Fund into a company owned by New York private equity giant KKR since December 2019. Shadow Industry Minister Alex Hawke calls it, verbatim, a government bailout in all but name. Arnott's booked $235 million profit in the 2025 financial year and spent $203 million of it servicing KKR's leveraged buyout debt. 86% of profit going to financing costs alone. How did the biscuit company William Arnott, founded in Newcastle in 1865, with just £14, end up as a KKR leveraged buyout, refinanced with Australian taxpayer money? Before we go any further, if you want to keep these stories alive, I've created a book with the complete Australian lost factories, the workers, the gates, the Australian made, all gone. The link is on the first line of the description. Back to the story. Chapter 1. 203 million. December 2025. Sydney Financial Press. The Arnott's Group refinances 1.75 billion Australian dollars of debt maturing in 2026. Arranged by KKR Capital Markets, Morgan Stanley and MUFG. Oversubscribed. Over 150 lenders participating. And 45 million Australian dollars of that refinancing comes from the National Reconstruction Fund Corporation, the taxpayer-backed body established by the federal government to invest in Australian industry. Its third debt investment, part of $1.02 billion invested across 17 commitments. The politics erupt immediately. Shadow Industry Minister Alex Hawke, on the record, verbatim. Not fresh capital to expand domestic production, but rather a refinancing of existing debt. A government bailout in all but name. Hawke goes further, verbatim. Something is very rotten in our economy if a business in Australia can't sell meat pies and Tim Tams to Australians without taxpayer subsidies. Arnott's head of corporate affairs, Chelsea Lahavre, responds via financial commentator Peter Switzer, verbatim. The NRMFC was one of over 150 lenders participating in the oversubscribed refinancing. It is not, as you suggested, any kind of bailout. Two positions, both technically defensible. But underneath the political spat, the numbers tell the harder story. Arnott's booked 235 million Australian dollars of profit in the financial year ending 2025 and 203 million of financing costs. Read that again. $203 million servicing debt against 235 million of profit. 86% of the profit generated by 4,000 Australian workers making Tim Tams, SAOs, iced Vovos and milk arrowroots, going straight out the door as interest payments on KKR's 2019 leveraged buyout debt. This is not fresh capital. This is not innovation investment. This is not new factories. This is the standard private equity extraction pattern. Chapter 2. £14. Rewind. 1865. Newcastle, New South Wales. William Arnott, Scottish baker, born the 6th of December, 1827, in Parthead, Fife. Emigrated to New South Wales aboard the Sir Edward Parry, arriving Sydney the 17th of February, 1848. Aged 21. Worked as a baker in the Maitland district from 1848 through the early 1860s. Suffered repeated flood losses in the Maitland district, 1856, 1857, 1861. A brief unsuccessful goldfield stint at the Turon River, 1851. Returned to baking, 1853. Then, April 1865. His first wife, Monica Sinclair, dies. He moves to Newcastle. He is 37 years old. He has 14 pounds. He opens a bakery on Hunter Street. Remarries Margaret McLean Fleming of Dumbarton, Scotland, and he begins baking bread, pies, and critically for a struggling baker in a Newcastle coal port, ships biscuits. The Newcastle port is booming. Coal ships from Wales, London, Chva, Batavia. Each ship needs biscuits, durable, dry, long shelf-life ration food for months at sea. William Arnott's ship's biscuits catch on. Within 1 year, he has repaid his Maitland creditors. Soon he buys the entire Hunter Street building. This is the moment the empire begins. Not with a strategic plan, not with an investor, not with a Wall Street term loan. With 14 pounds, a widowed baker, and the timing of the Newcastle coal boom. By 1875, 10 years after the Hunter Street bakery opened, William Arnott builds Australia's first steam biscuit factory. Melville Street, later renamed Union Street, in Cooks Hill, Newcastle, 50 workers, 1.5 tonnes of biscuits per day. By the late 1880s, the Cooks Hill factory employs 300 workers and produces over 80 biscuit varieties. William buys his own dairy herd, around 200 cows, to secure fresh milk for the biscuits. 14 pounds becomes Australia's biggest biscuit company in 23 years. The scale of what William Arnott did in the 1860s and 70s is easy to miss with hindsight. Australia's population in 1875 was under 2 million. Newcastle itself had fewer than 15,000 people. The industrial baking equipment was imported from Britain, steam-powered ovens, mechanical dough mixers, tinning lines, and had to be shipped, assembled and maintained by workers Arnott had to recruit and train from scratch. Ship's Biscuit, the durable, salt-preserved hardtack that ships needed, was a specialist product with unforgiving quality standards. A single bad batch could leave a vessel's crew short of rations on a Pacific crossing. William Arnott built a business that met that standard from Newcastle in the 1870s, and by the 1880s his ship's biscuits and milk arrowroots and milk coffees were competing with British and American imports on Australian grocers' shelves, and winning. Chapter 3. The Parrot, 1888. Cooks Hill, Newcastle. Miss Leslie Arnott, William's daughter-in-law, draws a logo for the company, a multicoloured Mexican parrot, perched on a T-shaped stand, eating a biscuit. The bird was, per family history, a real Mexican macaw, gifted to William Arnott by the captain of a Newcastle coal fleet ship in the 1870s. Miss Leslie Arnott sketched from life. The logo is registered 1888, trademarked 1907. Family folklore reads the composition as a rebus. The parrot on the T-shaped perch. On his T is the best polly I see, and honesty is the best policy. Whether that reading is family myth or genuine intent, the design endures. For 138 years, through 2 world wars, through the Great Depression, through the Campbell soup takeover, through the KKR leveraged buyout, through the 2020 rebrand attempt. The parrot survives them all. Also in this era, the Arnott's biscuit range takes shape. Milk arrowroot in 1882, one of Australia's first named commercial biscuits. Ginger nuts, nice biscuits. The SAO cracker launches 1904, name origin disputed, either Salvation Army officer for William's Salvationist brother Arthur, or a sailing boat William saw on Lake Macquarie. The iced Vovio trademark registered 1906. Milk coffee, Monte Carlo, 1926. Scotch fingers. The classic Arnott's biscuit range that would define Australian pantries for the next century. Meanwhile, the family succession is forming. William Arnott's son, Colonel John Maclean Arnott, born 1869, later companion of the Order of St. Michael and St. George, becomes managing director. His descendant, Halsey Rogers Arnott, born 1879, becomes chairman decades later. William Arnott retires 1899, dies 22nd of July 1901, buried in Newcastle. The empire he started with £14 is, at his death, the biggest biscuit manufacturer in Australia, family-owned, Newcastle-based, and carrying his daughter-in-law's parrot logo on every crate. Chapter 4. Homebush. 1908, Sydney. Arnott's opens the Homebush factory, 11 George Street, Homebush, the Sydney flagship, purpose-built for scale. The Cooks Hill, Newcastle factory continues. But Homebush becomes the modern operation. By the end of the 1920s, Arnott's produces 150 biscuit varieties. 1930s production tops £43 million per year. 19 Albion delivery trucks fan out from Homebush across Sydney every morning. During the Great Depression, Arnott's cuts to 3-day working weeks, but avoids layoffs. Family ownership prioritising Newcastle and Sydney workforce continuity through the worst years. Then World War II. 1939 through 1945. Managing Director Generation, Colonel John McLean Arnott CMG, still in the role, dying 1945. Halsey Rogers Arnott, Chairman. And on the food administrative side, Geoffrey Harold Arnott, born 1902, who assisted with the provision of food supplies during World War II to Australian and Allied forces, per the Wikipedia biographical entry. He would become Managing Director in 1954, Chairman from 1961 to 1975. Arnott supplies the Australian Army with hardtack ration biscuits throughout World War II, also called Anzac Wafer, Anzac Tile, Ship's Biscuit. The Australian War Memorial in Canberra holds one. Collection number C396165, accession number REL 28278. A square biscuit, pricked in a grid pattern and impressed diagonally across the surface. One word, Arnott. The AWM's own hardtack recipe was, verbatim, supplied courtesy of Arnott's Biscuits Limited, through Frank Townsend, Chief Chemist. Also documented, Arnott supplied sea rations to US forces stationed in Australia during the Pacific War. During the war, Arnott's cut its product range to under 20 biscuit lines. Iced Vovo, SAO, Milk Arrowroot, Monte Carlo, and Military Hardtack. The Powerhouse Museum, verbatim, priority was given to supplying the armed forces, but the civilian market had to be rebuilt after the war. Meanwhile, in Arnott's home city of Newcastle, the night of the 7th to 8th of June, 1942, Japanese submarine Y-21, commanded by Captain Kanji Matsumura, fires 34 shells at Newcastle from about 9 kilometres northeast. Target BHP Steelworks and the Carrington shipyards. Fort Scratchley returns fire with 4 shells, the only Australian mainland fort to fire on the enemy during the war. 1 house damaged, no deaths, no verified damage to any Arnott's facility. That matters. The Newcastle shelling was strategic city context, Arnott's hometown, not a strike on Arnott's. Same year, though, the original 1875 Cooks Hill factory closes, for reasons not attributed to the war or the shelling. Production had already shifted to Homebush, but the timing sits inside history. Chapter 5, 10 September 1964. Homebush, Sydney. 10 September 1964. Arnott's launches a new biscuit. 2 chocolate biscuits sandwiched around a chocolate cream filling, entirely coated in chocolate. Developed by Arnott's food technologist Ian Norris, inspired by a British penguin biscuit he sampled on a 1958 world trip, named by Ross Arnott, Leslie Ross Arnott, born 1906, a descendant of William Arnott, after the winner of the 1958 Kentucky Derby, an American thoroughbred horse. Tim Tam. Ross picks a horse name. It sticks. Australia takes to the Tim Tam in a way no one at Homebush predicted. By the end of the 20th century, Arnott produces 30 million packs of Tim Tams per year, 4 million individual biscuits per day. On the eventual Huntingwood production line, the Tim Tam becomes the single most iconic biscuit in Australian cultural memory, referenced in 97% of Australian households. Exported to the United States, the United Kingdom, and across Asia. Sold under the Australia's favourite cookie branding on American shelves. Also produced at Homebush through the 1960s and 70s, Monte Carlo, Iced Vovo, Scotch Finger, Milk Arrowroot, Sao, Milk Coffee, Nice, Ginger Nuts, Adora Cream Wafer, Orange Slice. Arnott's grows through defensive mergers. Morrow of Brisbane in 1949, Halfshare in Motterham of Adelaide in 1950, Mills and Ware of Western Australia, Brockhoff and Guests of Victoria, a 51% stake in Swallow and Ariel in 1964. The Australian Biscuit Company, later renamed Arnott's Biscuits Limited. Public listing, 1970, Australian Stock Exchange. By the 1970s, Arnott's controls more than 70% of the Australian biscuit market. Arnott's products are in 97% of Australian homes. The parrot logo, Miss Leslie Arnott's 1888 design, is on every pack. Peak family ownership. Peak Australian control. 105 years after William Arnott opened the Hunter Street Bakery with £14. To picture that scale, every Australian household, roughly, had an Arnott's biscuit in the pantry through the 1970s. Not many Australian households, 97% of them. Kids came home from school to milk arrowroots and milk coffees. Families opened iced Vovos at afternoon tea. Suburban dinner parties passed around Monte Carlos and Scotch Fingers. Camping trips carried packets of SOs and nice biscuits. Christmas gift tins featured the entire range. The Arnott's parrot was as visible in Australian retail as Vegemite's yellow and red or Bushell's teapot. And the Tim Tam, barely a decade old by the mid-70s, was well on the way to becoming its own cultural category, a biscuit brand so specific to Australian identity that Americans and Britons would later have it explained to them like a national dish. Arnott's had also become the Australian biscuit industry effectively. Through the 1960s and 70s, the family-led defensive mergers had absorbed most of the country's regional biscuit makers. Morrow, Motterham, Men's, Mills and Ware, Brockhoff, Guests, Swallow and Ariel. All rolled into the Australian Biscuit Company and then rebranded under the Arnott's name. Competitors in Sydney, Melbourne, Brisbane, Adelaide and Perth all became Arnott's plants. And then the family starts selling. Chapter 6. Camden, New Jersey, 1985. Something changes. Sources conflict on the specific trigger. UPI in 1993 reports the threat was Bond Corporation, Alan Bond's Perth-based conglomerate, making a hostile takeover approach. Funding. Universe's company history says the threat was Nabisco, the American National Biscuit Company. Either way, the Arnott's board reaches out to Campbell's Soup Company, headquartered in Camden, New Jersey, United States, and invites Campbell to take a defensive stake as a white knight, the friendly foreign buyer that blocks the hostile Australian or American bidder. Campbell's initial stake, reported variously at 14%, 20% or 33%. Sources disagree. The consistent point, Campbell entered as an invited white knight. By 1993, Campbell holds 33% and makes an outright takeover offer. UPI, verbatim. Campbell's move to win a majority stake in Arnott's sparked outrage among Australians who view the 128-year-old cookie maker as something of a national institution. One group filed suit to halt Campbell's takeover bid, while many shareholders held out for a better offer. Campaigns organise. Petitions circulate. The Foreign Investment Review Board reviews the acquisition. But the Arnott family shareholders, descendants of William, Colonel John Maclean, Halsey Rogers, Geoffrey Harold and Ross Arnott, face a choice. Sell to Campbell or hold out. By 1994, Campbell holds 70%. By 1997, 100%, 12 years from initial stake to full control. The Advertiser, September 1997, quoting Arnott's managing director Chris Roberts on the pivot Campbell was making. The most important step into the future is into the snack food market and out of biscuits. Out of biscuits. That sentence from a Camden-owned Arnott's executive told Australia exactly where the company was going. 132 years of Arnott family ownership ended not in one chainsaw owl moment, ended not in one Tokyo boardroom vote, ended across 12 progressive years of share sales by 3 generations of the family William started. Between them, the Arnott family took Campbell's money and walked away from Newcastle, from Homebush, from the Biscuit Empire. Chapter 7. The Rationalisation, 1997 through 2019, 22 years. Campbell Era, 1997, Homebush closes. The 1908 Sydney flagship. Production consolidates to a new mega plant at Huntingwood, 40 kilometres west of central Sydney. The 89-year-old Homebush site falls silent. It becomes the Bakehouse Quarter, a mixed-use precinct. The heritage SAO sign is retained. The parrot motifs are retained. But biscuit manufacturing at Homebush ends. Same year. Otahuhu, New Zealand also closes. 2001. A $30 million Australian dollar upgrade to Sydney, Adelaide and Brisbane plants. And announcement of the Melbourne Burwood factory closure, the former Brockhoff plant Arnott's had absorbed decades earlier. September 2002, Melbourne closes. 600 workers made redundant. Federal Hansard, 23rd of May 2001, recording the announcement verbatim. I was present when on 2 May, 600 workers were told that their jobs were going. 600 full-time, part-time and casual jobs will be terminated. 600. The Melbourne Brockhoff line was cheaper to run elsewhere, so Campbell moved it. 2014. Marleston, Adelaide. Campbell Arnott's announces 120 redundancies. Vice President Supply Chain Craig Funnell, verbatim. The cost of manufacturing a mainstream product here would be up to twice the cost of what it costs to make in Sydney and Brisbane. Roughly 30% of Marleston production shifts to the Sydney and Brisbane super sites. Marleston keeps only the intricate lines, iced Vovo, Venetian, honey jumbles, caramel crowns. National Union of Workers organiser Tony Snelson presses the South Australian government to respond. Meanwhile, sometime around 1996 or 1997, sources conflict on the year, the Monte Carlo extortion crisis. A woman named Joy Ellen Thomas, aged 72, threatens contamination. Arnott's recalls 22 million Australian dollars of stock. The company is praised for transparency, publishing the extortion threats in full-page newspaper ads. Charges are ultimately dropped for conflicting evidence. Then Campbell itself begins failing. CEO Denise Morrison ousted 2018. Successor Mark Clowes is forced to pay down debt taken on for the Snyder's-Lance acquisition. Campbell puts its international operations up for sale. Arnott's is on the block. Chapter 8. 2.2 billion, 2 August 2019, Camden, New Jersey. Campbell Soup Company announces the sale. Arnott's plus Campbell's International Operations to Kohlberg, Kravis Roberts and Company, KKR, New York. Purchase price $2.2 billion US dollars, approximately 3.2 billion Australian dollars, largest KKR buyout in Australia ever. Signed 2nd August 2019. Completed 23rd December 2019. KKR funded primarily through its core investment strategy, capital targeting, in KKR's own words, longer-term opportunities. KKR framed Arnott's publicly as a long hold, not a quick flip. Named KKR executive on the deal, David Lang. Partner and co-head of KKR Australia and New Zealand. On the record, verbatim, we are privileged and excited to have the opportunity to invest in and grow Arnott's as an independent business in Australia. Brian Driscoll, KKR Senior Advisor, chaired the Arnott's board and served as interim CEO. The underbidder was Pacific Equity Partners of Sydney. Advisors, Allens and Simpson Thacker for KKR, King, and Wood Mallisons for Campbell. Goldman Sachs and Centreview Partners running the auction. And underneath the deal, the debt. Gilbert and Tobin advised KKR on the financing structure, verbatim from Gilbert and Tobin's own case summary. The G&T banking team advised KKR on the $1.04 billion Australian dollars and $400 million US dollars first lien and second lien. Term Loan B financing of its $3.2 billion acquisition, $1.04 billion Australian dollars, plus $400 million US dollars, first lien and second lien term loan. B. Loaded onto Arnott's books at the moment of purchase. Not investment capital. Debt. Here's the honest thing. This is legal. This is documented. This is the standard KKR leverage buyout playbook. G&T banking teams structure it. Morgan Stanley and MUFG later refinance it. Reuters analysts explain it verbatim. Buyout specialists such as KKR routinely cut costs of portfolio companies to improve profitability and prepare for resale in periods of typically 4 years. On 23 December 2019, the deal closed. William Arnott's £14 Newcastle bakery, 154 years after opening, was owned by a New York private equity firm. The $2.2 billion US dollar price tag also captured Campbell Soup Company's other international brands. Kelsen Group's Danish butter cookies, Kelson's, and other regional operations. Combined, Arnott's plus Campbell international net sales for the year, approximately $885 million US dollars. Combined workforce, approximately 3,800 people, per Campbell Soup Company's own 2nd August 2019 press release. Australian financial press covered the deal as one of the largest KKR investments in the country's history. The Australian Financial Review, the Sydney Morning Herald, ABC News all ran extensive coverage. Some ran nostalgic pieces on the parrot logo and the Tim Tam legacy. Others ran analysis of the debt structure and the extraction pattern that typically follows KKR acquisitions. But the deal was legal, regulated, and by the standards of global private equity, food and consumer transactions, unremarkable. KKR's core investment strategy had been buying long-hold consumer businesses across Asia-Pacific for years. Arnott's fit the profile: iconic brand, resilient cash flows, real estate that could be sold and leased back, room for operational tightening. KKR was doing what KKR does. Chapter 9. The Sale and Leaseback, January 2020 onward. KKR era, March 2020. Brian Driscoll hands over to permanent CEO George Zogby, former Kraft Heinz Chief Operating Officer, US Commercial, former Fonterra, former George Weston Foods, named to run Arnott's, June 2020. First job cuts since the buyout. Approximately 50 corporate roles made redundant. August 2020. Corporate rebrand. Arnott's becomes the Arnott's Group. Streamlined modern parrot corporate logo. Public backlash on social media. Arnott's clarifies, verbatim. We know Australians love the iconic Arnott's parrot logo, and that is not changing at all. The classic Miss Leslie Arnott parrot stays on biscuit packs. The corporate parrot changes. Then the real estate. Huntingwood, the flagship megaplant that produces 4 million Tim Tams per day, 24 hours a day, 7 days a week, is sold. Sale and leaseback to Charter Hall Group. 397.8 million Australian dollars. 50% to Charter Hall Prime Industrial Fund, 50% to Charter Hall Long Whale REIT. A 32-year lease. Virginia, Brisbane, 46 Robinson Road East, 7.18 hectares, 44,785 square metres, sold to Centuria Capital Group. 211.8 million Australian dollars. 30-year leaseback. Marleston, Adelaide, 23 to 41 Galway Avenue, 23,593 square metres, sold to Centuria, 24.4 million Australian dollars, 12-year lease. 3 transactions, 634 million Australian dollars of factory real estate sold, cash to KKR's balance sheet or to KKR managed refinancing, and Arnott's continues to make Tim Tams and SIOs and iced Vovos in those buildings, as a tenant, not the owner. Textbook private equity asset monetisation. Extract the real estate. Load the operating company with lease obligations. Keep making the biscuits. And underneath all of it, the term Loan B debt still sits on the Arnott's Group books. Servicing costs mounting through 2023, 2024, 2025. Until they hit 203 million Australian dollars a year as of the 2025 financial year. Chapter 10. The Bailout Row. December 2025, 6 years after the KKR buyout. The debt maturity approaches. A refinance is required. KKR Capital Markets, Morgan Stanley and MUFG arrange a $1.75 billion Australian dollar refinancing package. Over 150 lenders participate, and 45 million Australian dollars comes from the National Reconstruction Fund Corporation, the taxpayer-backed body established by the Albanese Labor government to invest in Australian industry, its third debt investment, part of $1.02 billion invested across 17 commitments. The political explosion is immediate. Shadow Industry Minister Alex Hawke on the record verbatim. Not fresh capital to expand domestic production, but rather a refinancing of existing debt, a government bailout in all but name. And separately, on the same story, something is very rotten in our economy if a business in Australia can't sell meat pies and Tim Tams to Australians without taxpayer subsidies. Arnott's Head of Corporate Affairs, Chelsea Lahavre, responds via Peter Switzer's financial commentary program verbatim. The NRFC was one of over 150 lenders participating in the oversubscribed refinancing. It is not, as you suggested, any kind of bailout. Crikey magazine describes Arnott's in December 2025 verbatim. The struggling biscuit company that is foreign-owned and controlled by the billionaires at private equity giant KKR. The political spat obscures the harder financial reality. Arnott's booked $235 million profit in 2025, spent $203 million of it on financing costs, sold one Victorian manufacturing facility during the same year. and the Term Loan B debt structure from 2019 is essentially rolled forward into 2026 under a new package. The Australian financial press notes that KKR is also reportedly considering a sale of Arnott's Asian arm, with CVC Capital Partners named as a potential buyer. Standard private equity playbook: acquire in 2019, extract through sale and leasebacks and dividend recapitalisations, refinance the maturity wall, prepare for the ultimate exit, a strategic sale or an IPO, probably within the next 3 years. The $203 million annual financing cost is the extraction. To make the bailout row concrete, $45 million Australian dollars of taxpayer money via the National Reconstruction Fund went into a debt refinancing arranged by KKR Capital Markets, not into a new Australian factory, not into a new product line, not into training or apprenticeships, not into export development, into refinancing debt that KKR itself installed on Arnott's books 6 years earlier at the moment of purchase. The National Reconstruction Fund's stated purpose, per its own founding legislation, is to invest in Australian industrial capacity. Renewable energy, advanced manufacturing, medical science, agricultural technology. The Arnott's participation was not a grant. It was structured as commercial debt, with commercial interest rates. And Arnott's is technically an Australian-based business with over 2,500 Australian workers, per the NRFC's own statement in December 2025. But the political optics, a taxpayer-backed fund putting money into the refinancing of a New York private equity firm's Australian portfolio company, were bad. And the numbers underneath the optics were worse. $203 million of annual financing costs. On a company that once was owned by the Arnott family in Newcastle for 132 years, without incurring anything close to that debt burden. Chapter 11. The Bakehouse Quarter, 2026. Walk to Homebush Bay, Sydney, the Bakehouse Quarter, where Arnott's Homebush factory ran from 1908 to 1997. A mixed-use precinct now. Restaurants, cafes, gyms, apartment towers. The heritage SAO sign has been retained. The parrot motifs have been retained. But biscuit manufacturing at Homebush ended 28 years ago. Drive west 40 kilometres to Huntingwood. The mega plant still runs, 4 million Tim Tams per day, one of the largest single product manufacturing operations in Australia. But Huntingwood is not owned by Arnott's anymore. It is owned by Charter Hall Group. Arnott's is a tenant, under a 32-year lease. Drive further west or fly north to Brisbane's Virginia factory, sold to Centuria, or south to Adelaide, Marleston, sold to Centuria, all three legacy Australian factories, leased back from external landlords. Drive north to Newcastle. William Arnott's original 1865 Hunter Street bakery, long gone, redeveloped decades ago. The 1875 Cooks Hill Steam Biscuit Factory, closed 1942, demolished 1949. No plaque for William Arnott. No plaque for the £14 bankroll. No plaque for the 300 workers who built Australia's first biscuit empire. Just Newcastle streetscape. Drive to Canberra, the Australian War Memorial. Collection C 396165. Accession REL 28278. The Arnott's Hardtack Biscuit, as issued to the Australian Army during World War II, square. Greed pricked. Impressed diagonally with one word. Arnott. Meanwhile, 30 Hudson Yards, New York City, KKR headquarters, still owns the Arnott's Group, managing the $1.75 billion refinance completed December 2025, managing the $203 million annual financing costs, managing the exit strategy, and every Coles, Woolworths, IGA and independent grocer across Australia still stocks Tim Tam, SAO, iced Viovo, milk arrowroot, Scotch finger, Monte Carlo. Nice. Ginger nuts, Miss Leslie Arnott's 1888 parrot logo, 138 years old, still on every pack. The biscuits are still Australian made, in Australian factories, by Australian workers, under Australian dollar wages, but the company that makes them is owned in New York, and the profit, most of it, goes to servicing KKR's 2019 buyout debt, $203 million of it, every year, straight out of Australia. To the balance sheets of KKR's core investment strategy investors, wherever in the world those investors happen to sit. Lesson 1. Family businesses sell when the family runs out. Industrial South has told 38 stories of Australian factories that fell. Some to founder decisions, Halverson's fiberglass revolution, Franklin's Robertson exit at the peak. Some to corporate fraud, Cleanmaid's young family, Sunbeam's chainsaw Al Dunlap. Some to structural policy, Commonwealth Aircraft Corporation, Nissan Clayton's Yokohama boardroom decision. Arnott's is different, because Arnott's fell to a family exit that took 12 years. Not one chainsaw Al moment, not one Tokyo boardroom vote, not one hostile takeover victory. But 12 years of progressive share sales from 1985 to 1997. Across 3 or 4 generations of the Arnott family, the great-grandchildren, great-great-grandchildren and cousins of William Arnott, the pressure built. Campbell offered good money. The Australian biscuit market was consolidating. Nabisco or Bondcorp were circling. The Foreign Investment Review Board approved every step. The family shareholders, one by one, took the exit. Read that again. 12 years, not one decision. When a family business runs out of family members willing to keep it Australian-owned, the sale happens. Not because the family is greedy, not because the family is disloyal, because family businesses require every generation to accept lower returns than they could get by selling. And by the 5th generation, the calculus changes. William Arnott built the company with £14. His great-great-grandchildren sold it for hundreds of millions of dollars each. That is a rational decision by each individual shareholder. That is also, in aggregate, the end of Australian family ownership. Every family-founded Australian company that reaches 130 years faces this decision. Most sell, because most families run out. Not Franklin, not Halverson, not Cleanmaid, and not Arnott's. Lesson 2. Private equity doesn't buy companies. It buys cash flows. KKR bought Arnott's for $2.2 billion in December 2019. KKR did not put $2.2 billion of KKR investors' own cash on Arnott's books. KKR put approximately 1.04 billion Australian dollars plus $400 million of Term Loan B debt on Arnott's books. Debt that the operating company itself is legally responsible for servicing. Then KKR sold Arnott's Australian factory real estate to Charter Hall and Centuria. 634 million Australian dollars combined. Huntingwood, Virginia, Marleston. Arnott's continued to operate in those buildings under 30-year and 32-year leases. Then, in the 2025 financial year, 6 years after the buyout, Arnott's booked $235 million profit and spent $203 million of it servicing the KKR installed debt. 86% of the profit generated by 4,000 Australian workers making Tim Tams, SAOs, iced Vovos and milk arrowroots at Huntingwood, Virginia, Marleston and Rowville, going to interest payments on debt that KKR arranged in 2019 for KKR's own investors to profit from the eventual exit, that is private equity extraction. To be clear, this is legal, this is documented, this is the standard KKR playbook. Gilbert and Tobin's banking team advised on the debt structure. Morgan Stanley and MUFG arranged the 2025 refinancing. It is not fraud. It is the extraction pattern. And when a private equity firm buys a 154-year-old Australian family business, the business itself isn't the product. The cash flow is the product. And every dollar of cash flow that goes to debt service is a dollar that doesn't go to Australian workers, Australian factory upgrades, Australian innovation, or Australian tax receipts. Lesson 3. The parrot survives. The company doesn't. Miss Leslie Arnott. Drew the parrot in 1888, a Mexican macaw eating a biscuit on a T-shaped perch. Registered as a logo, 1888. Trademarked 7 years later. She died decades ago. The macaw died over a century ago. The bakery in Hunter Street, where the parrot was first hand-painted onto crates and tins, is long gone. William Arnott is long gone. Colonel John McLean Arnott is long gone. Halsey Rogers Arnott is long gone. Geoffrey Harold Arnott is long gone. Ross Arnott, who named the Tim Tam after a Kentucky Derby horse, died in 1997, the same year Campbell took full control. The last of the Arnott generation that ran Australia's biscuit empire. And yet, the parrot survives. On every Tim Tam pack, every Sao pack, every iced Vovio pack, every milk arrowroot tin. Sold in every Coles, every Woolworths, every IGA across Australia. And in Canberra, the Australian War Memorial hardtack biscuit, with Arnott impressed diagonally, remains as a museum artefact from the war William Arnott's great-grandchildren fought. Meanwhile, the company that owns the parrot, the Arnott's Group, is owned by KKR, refinanced with taxpayer money in 2025. Managed from New York, preparing for its exit, a sale or IPO, probably within the next 3 years. When an industrial empire falls to private equity, the badge survives on the artefacts. The company itself does not. Not as the same company, not with the same ownership, not with the same family, not with the same country making the decisions. The Tim Tam is still made in Australia, but the company that makes it is owned in New York, and 86% of the profit goes to debt. The parrot is a memento. The empire is history. $203 million. Arnott's 2025. The parrot remembers. William Arnott's £14 does not.